Hi everyone, I hope you're well. It's Monday, it's the 17th of March, and I don't know if you can tell, but I've got my green on today. It's green, it's the greenest shirt I've got, to be honest. It's St. Patrick's Day today, so all my colleagues and friends and associates and family in Ireland celebrating today. Happy St. Patrick's Day. I hope you have a great crack. I've had some fantastic St. Patrick's Days in the years gone by. A lot of them sort of obliterated to the power of the Guinness. But hopefully you're having a great day. I say the crack is with you today. So 17th of March, we're starting the third week of March, a key week. We got the Bank of England with some interesting comments later on in the week, but more importantly, as far as markets are concerned, obviously we've got the Fed on Wednesday, and sitting above all of that is obviously President Trump and his latest machinations. What's going to go on this week? What's not going to go on this week? All sorts going on in America. We'll touch on that a little bit later. But I'm going to start today with the gold chart. We're going to obviously look at US retail sales later on in the next 20 minutes. That data comes out at the bottom of the hour. Remember, we're still out of sync with the United States, Europe, and with the United States and North America generally until the end of the month when the European clocks go back or go forward to summertime. So it's an hour earlier than normal. So 12 minutes time, we get US retail sales. Let me just make the chart a bit bigger, not me, got the chart a bit bigger, don't we? There we are. Obviously, anything you want to chat about, guys, please let me know. In which pair we should have to make a trade? An interesting comment. Runak, it's really we'll look at some live markets in a minute if that's what you're interested in, but really your approach to trading should be the same. Oh, that's not good, you can't see. Let me just get rid of the I'm going to take the design off for a change. There we are. I'll bring that back in a minute because we can't see in the top corner. Well, it depends on your approach to trading. Any asset moves around, Runak, and it's really, as I say, it's really what you want to, what your approach to trading is. Whether you're going to trade on something like this, the hourly time frame, whether you're going to trade on the 5-minute time frame. Charts look the same, so we can make money. More importantly, we can lose money and do lose money more regularly than we anticipate. So it's really about planning your trades, doing some research into what you're interested in, not having too many trades open at once. Not risking, always not risking too much when the trade is open. This one here is the gold trade, which we had open. It's been opened on the daily basis, and we opened it all the way back here on the 4th of March, just on a bit of a hunch that we'd rejected this dip down we'd had here. See that we went on this line here, which happens to be one of the key indicators I use, the 21 exponential moving average on a daily basis. It didn't do anything for not weeks, but for days. It was going sideways. And on this day here, I nearly closed it out. It was a Friday, wasn't it? It's a Friday. We went. Was it a Friday? No, it's anyway, the 10th. But the 20, my moving average held here. This time we ducked under. Looked like it was going to go short. It didn't, and that's why we got in here on the close of business on the 4th. So sideways, out of the money quite significantly here. Obviously, on the 10th, the 11th we turned around. We moved higher here on last week, and then we had a big blowout on the 13th on Thursday. So it was big profit into profit, significant. We pulled the stop loss up on Thursday and Friday. We pulled the stop loss up again on Friday again. We went through the hugely psychological 3,000 level here. If we could bring this down to the hourly chart now, you can see here on Friday we went through the 3,000 level in early trades in Europe, and then we dipped down and pulled the stop loss up right up. I thought this might get closed out before the close of business on Friday. It didn't. We came within a pip or two of sorry, no, PC's playing up. Sorry. pings in here. So we came within literally, I'd pulled this up to this 2978 level. Came within like $1 of getting stopped out on that one on Friday. It didn't happen, and we closed around about the 2980 level. We've rallied again this morning to 3000 level again. Talk and rally on possibly buyers getting in, but then a big move down. There's all sorts of geopolitical things driving the price of gold, and more on that in a minute once we've seen the retail sales numbers out of the United States and we've been through some of the other assets. The other thing I was going to do today is go through that run we had on Wednesday. I haven't had a run like this for quite a while, but it happens from time to time. I had 9 losing trades in a row, consecutive 9 losing trades, 8 pips, 55 points, 100 points, 120 points, 105 points, minus 24, minus 35, minus 33, minus 42. That obviously gets into your head after a while. Even me, that's been doing it for a long time, you think you can't do it. But then over the weekend, we had a nice big hit on the XRP trade we'd taken, and that sort of ruled out a lot of those losses. But also, obviously, this gold trade is very much in the money as well from a points point of view. It's like 600 points, obviously, from a percent. That's how we talk about it in percent point basis. But percentage basis, it's up quite significantly as well. I mean, 1 or 2% is what I'm looking for, but this is up 3% quite nicely from this entry all the way down here. And I might start relating it in percentage terms, because I say to people about thinking percentage terms, how much percentage you want to win. Do you want to win 1% a week? Do you want to try and make 2% a month, 0.5% a month, 0.5%? Whatever it is, don't make it onerous, don't make it too difficult, but I accept that you will have losing days, losing trades, and just like we had last week, we had 9 consecutive losing trades. These things happen. If you don't think those things are going to happen, don't trade. Go and do something else, because it's not for you. This is a mind game, success in trading. We'll go through all those details in a little bit. So to answer your question, Runat, you want something that's highly liquid, so something like gold, the euro dollar, euro pound, pound against the yen, depending on what is going on. But if you're interested in intraday, we'll go through what's happening so far today. Today we've had here, if we look at this morning or the beginning of the week here, the 17th here, or last night. So really here, this market here on this hourly chart has been biased to the upside. It's drifted up or moved up to 3,000, and it's profit taking's happened quite significantly, and that's quite a big candle in this current hour candle, which is still half an hour for completion. If we go down to the shorter time, you see how it's rejected. Look at the 15-minute, for instance. Nice steady rally this morning from 9 o'clock. Up, and then a big badang. We got to 3,000. We couldn't hold it. We couldn't get to Friday's high, which was 3,004, the all-time high. This is this point here, 3,000 and what was it? 3,004, 3,005. Wasn't it 3,004? Something it was. Anyway, we couldn't get to that this morning, and we've sold off quite aggressively here on this particular time frame. So this is now moving down, and it's into a key support area here for this particular time frame. So it's all about the time frame. It's all about the asset, Runat. But I say, if you want some more information, keep in touch and keep watching. So gold sideways today, and let's have a quick look at where we are with the US retail sales and other data that's come out this morning. We had quite a tick up in UK house prices this morning as well, 1% and 1% on an annualized basis. So again, UK house prices continue to move to the upside. Some positive data out of China as well this morning. Industrial numbers quite better than expected. Fixed asset investment also better than expected. The key data we're looking for is in 4 minutes here, the retail sales data out of the US, and also the New York Empire State Manufacturing Index. The state of New York is a significant manufacturing sector and this indicator used to be quite market moving. It's much less market moving than it used to be, simply because manufacturing is much less of a significance with GDP and the economy of the US. However, it's a hugely significant from a sentiment point of view. Countries, companies like to make stuff, especially, and obviously with current president, one of his big mantras around his Trump tariffs is bringing manufacturing or bringing back to the United States, into the borders of the 50 states of the United States. So places like Philadelphia, New York are key to those, and Richmond are key to those manufacturing numbers. So this number is very volatile. It jumps around all over the place. It's been as high as, you can't see it on here, but it was like 20 something. It was 5 last month. It's expected a decline for the March reading. Yeah, that's out in a few minutes time. So that's the main economic data of the day. Obviously, the sentiment stuff, the stuff around the war in Ukraine, and Trump speaking with evil Putin tomorrow about some assets are on the table. Apparently, the arch negotiator is at it again. So we'll see how that call goes tomorrow. Market's hanging on that. Obviously, very much hanging on Wednesday's FOMC announcement as well. But as far as the geopolitical situation is concerned, we've had attacks on the Houthis from the United States over the weekend as well. That spiked the oil price. We've had people being deported, even though a judge said it shouldn't be done. They were already in the air. So gangs of the US administration are characterizing gangs of Venezuelan thugs and drug barons being kicked out to El Salvador. The president of El Salvador, big Trump fan, so 300 people, I think, were extradited out of the United States on flights over the weekend. So all sorts going on across the breadth of the agenda that Trump came in on, and obviously some of it will have market impacts, others won't. But the swirl, the somewhat chaotic ways of things flying out from not tweets, but on the social media platform, is unnerving many members of the business community, which is why we've had a rollover in stocks in particular, and also this big rally we've seen in the gold price as well. So a minute to the data. Let me just see if I can bring in my Forex Factory calendar as well. We see the that's the wrong one. Forex Factory is here. So we'll see what that looks like. So core is coming in line with expectations at 0.31%. The headlines come in at 0.2 of 1%. So this is coming quite a big miss month on month. And Empire State is coming at -20. So let me just show you the. Actually, I'll just refresh this when you see it, and I'll bring in the. I'll show you the way that. Going it. There we are. So cores missed here quite significantly at 0.2, coming in at 0.21% compared to expectation of 0.6 of 1%, minus 1.2% as well. So that's been revised from minus 0.9 of 1%. So that's worse than that's been a revision's got worse. It's missed expectations. The control group is actually better than expected, but the previous month was revised down only 2 ticks from 0.8 of 1% to a full 1% worse. The core number has come in line with expectations of 0.31%. So it's a bit of a mixed message coming out of that retail sales number. Remember on Friday we had that big miss for consumer sentiment is a 2-year low, and inflation expectations are very, very high. But again, the core number's been revised low as well. So it's biased, really negative, I would argue, on that data in in full. We're looking across that piece there. And then interestingly, the New York manufacturers haven't actually updated here, but on my other calendar here, it's coming at -20, so -20 for the New York manufacturing units. I'll just show you on the Forex Factory. We are today. Forex Factory calendar here. So -20 for the Empire State. So overall, that's quite negative for the US economy. And again, if you just look at the state of the core retail sales, which is the key number, which is coming in line, it's sort of flatline. There's not a, it's adding to the argument from the bears about potential recession in the United States and the consumer weakening. It's not moved significantly on a month-by-month basis. If we look at the core group, if we look at the headline numbers as well, it's not it's not moving significantly in either direction. So there's a flip side around that as well. But again, just for completeness, we look at the Empire State. It is it is a very volatile figure. But as you can see, the last few months it's been biased to the negativity and downside, and exceeding expectations. Now the blue is much higher than the brown expectation number here, so it can chop around, and does indeed chop around quite a bit. So the impact of all of that, one would argue, could be a potential stronger dollar. Let's show a quick 5-minute chart, see how the gold market's reacted to that data. So there's the data ahead of the news. It jumped up and it's moved back down, so gold's moved to the downside. So the dollar may have picked up a bit. I can't imagine that moving much as far as the other the major cross. I don't want that. I want trades. I don't want that. I want that. So we have a quick look at the majors on this. So euro here, both positive and negative, but overall, within 5 minutes of the data coming, it's continued its decline today. So dollars picked up on that relatively weak numbers. So the expectation is that it might pull forward the likelihood of or add to the argument of the Fed may need to act rather than leave things as they are. But we'll see. Obviously, really a lot will depend on what's said and what the dot plot looks like on Wednesday. That's the key data of the week. But say more on that later in the week. So euro this morning, we've rallied to 109.12, and following the key data of the day, we're now back over 109. So if we look at the higher time frame, so we've had a positive start to the week, back over 109, closing flat here on Friday. But interesting to testing those levels from Friday as well, in the 109.12 area earlier this morning. So we've sort of rolled back under 109, so it's biased in the short term to the downside. However, euro dollar here on the hourly time frame would need to break over the 108.85 zone if we're going to take this back into the cluster or in the Asian session. Overall, euros are somewhat bid against the dollar, despite moving down on this initial data. Dollar yen 148.75. The hourly time frame, so dollar coming back a tad here in this hour as it's running to the 50-hour moving average support area. First support of the day, then second support of the day as it's come under the 20. So it's moved down quite significantly today. So again, another one interesting. It's moved higher. Was that Friday? No, that was the 12th. So we got to Monday's high for dollar yen was higher than Friday's, but we were around about Thursday's highs. We went back to 149. So dollar yen today has rejected 149, but it's got big support at 148.45, where the 50-hour moving average is playing out. So again, it's a bit of a range bound move, and dollar improving on the retail sales number. This looks like that might have moved more aggressively than the euro. Indeed, it has. on the retail sales in New York Empire State numbers coming up. So, if you were at Runak, I mean, again, can't tell you what to do. Also, this has been moving down all day. This has been a positive reaction to the data. So that would be a buying potential opportunity there at 148.70. And you're already 5 or 6 pips into the good on that. So, if you're following this strategy, you've been short here, that would have been a potential signal to buy, but it's 10 minutes ahead of the data. So wait till the data's out. Yes, you get in a much later spot waiting for the data to, assimilate 5 minutes after the data's gone out. Just, keep, because otherwise you're in danger of selling it down here or thinking it was going to go down and continue this down leg, rejecting this 50 moving average at the moment, but that's moving up to the upside. So dollar yen is positive, as we saw euro on the same sort of time frame. That's continuing in the same vein. So that would be, there's the 5 minute. Sorry, that's the data. And that's the 5 minutes up. That should have completed by now. Oh no, that's the yeah, that's finished. That one's finished. So we're looking to be short euro, dollar, as it's under its 50 period and 20 period here in this 5 minute time frame, with the stop loss sort of probably back up there somewhere at 109 or I don't know, put it top of that candle there, 109 or 4, but short on this one as it's moving down. Sterling with a similar sort of pattern, perhaps not as exaggerated as the yen, but again, interestingly, that's gone less negative. You see this different style of the candle. It's still negative, but we're still above the 50, so it's less of a sell than we saw with the euro. See the euro here. It's breached the 50 period moving average on the same time frame, so that's weaker. So sterling against the dollar is relatively stronger, although it's weaker. So it might be looking to move, tick up to the upside. The yen. Very nice. So there we go. So we're another few pips into the good there from that break there. So that would have been long there. This would have been short here on the break of the 50, and moving down. You stop loss up here to make sure you don't get taken out, lose too much if that's go against you. But it's starting to edge a bit low. The other majors, Aussie at 63.45 this morning. Again, here on the 5 minute, done exactly the same thing as the others under its 50 period moving average. So that the data that for the US today has been absorbed as positive. I don't know what the politics is that's rolling around at the moment. I'm sure there's something going on, or something may have been said earlier, but my newsfeed, there's nothing new on my newsfeed. Futures of stocks are up, but yeah, retail sales being a bit weaker. It's lifted the dollar, which sounds counterintuitive, but it might be the fact that puts this anticipation of the rate cuts perhaps less further on the back burner as you make sense as the consumer, another tick in the consumer weakening, fractures showing in their habits. And also the other key thing obviously is the fact that the previous if we show it looks better on here, the previous data was also, previous months was downgraded quite significantly in some points as well. So it's a weaker overall retail sales, which has helped lift the dollars when we're this is obviously the key monthly number, 0.6 of 1%. It's come in a third of that, a 0.2 of 1%. So it's quite a significant miss. So obviously more data. We got housing, we got industrial numbers as well ahead of what Mr. Powell and his guys will say at the press conferences. Obviously, the decision itself is virtually nailed on. They're not doing anything with regard to changing the actual rate, but obviously their outlook and their dot plots and their inflation expectation is all key. But anyway, let me just, that's what we've got the calendar here. Let's just show you the big events of the week. Let's select all major ones, the 2 and the 3, see if this works. wasn't working earlier. There we are. So that's the big event of the day. We got retail sales out of the way, some inventories. Inventory will be interesting as well, given the fact that a lot of businesses are sort of front running the expectations of tariffs. So inventories become much more relevant. Miss Lagarde has a speech later this afternoon as well. Tomorrow, we got the key sentiment indicators out of Germany, and for the EU, the ZEW. That's relatively important. We'll be live for the Canadian inflation data tomorrow at the same time. Tomorrow, the private oil inventories will be becoming more key, given the talk of talks between the US and Iran. I didn't mention that earlier, that they're back on the cards apparently as well. So the flailing Trump administration is spreading its net all over the place. So nuclear talks with Iran also on the place. Apparently the letter that the US sent says either you come to the table or there'll be consequences. Suggesting actual direct attacks on Iran or Iran proxies, and obviously the attack at the Houthis, who are still shelling container ships and tankers in the Gulf, came under US attack again over the weekend as well. So all sorts going on, my friends. So keep well abreast of the news as well. Wednesday, we have the Bank of Japan expected again. No change from the Bank of Japan. We're all the way down here at 0.1%, although have been negative interest rates in Japan. Inflation from the euro area. And then on, I say, not the Fed here, and these key projections. This is what's going to really hold the attention of us on Wednesday. But again, I'll be live for this, guys. So we'll see how that goes. And then obviously the Fed press conference later, how Mr. Powell deals with all of that. Thursday sees Bank of England attention turned to London. We've got jobs numbers and also the Bank of England. We've got another speech from Ms. Lagarde. We've got the Swiss National Bank with their expected rate cut again from 0.5 to 0.25 of 1%. Bank of England later on. See what this. Last time we had the big surprise in the vote as well. No change expected very much this time, but again, see how Mr. Bailey copes with the press later on. So lots going on. Weekly claims remain incredibly robust in the US. So Thursday, a huge day, and then we've got the Philly Fed. We've had the Empire State today. See if the Philly Fed holds up or is as weak as the Empire State was. Existing home sales. So there's lots going on Thursday. A key data day following the Fed on Wednesday. And Friday, we finish with the retail sales out of Canada. And Deputy Chair Williams has got a speech as well later on. But obviously, Tuesday is also when Trump and Putin are supposed to be speaking on the phone. So obviously, that sits in the background of all this economic data going on. So let's have a quick look back of where we still are. See if we still got the same move yet. Euro continues to weaken, so this is moved quite nicely. So that break there would have been our entry here 5 minutes after the data's come out, and we're nicely in the money. Yen going the opposite direction. There we are. We're back up, continuing to move forward. Running out of steam now because the data's out. That was I don't know what, that's an old entry level for some reason. Where are we? We're trading at 148.85. As I said earlier, we were sort of rejecting 149 this morning. So that's that's the high of the day. Looks like we may be petering out, but that's maybe your upside target 149 might be a step too far. So we didn't get there in the Asian session. Remember when the the volumes are smaller, but obviously the Japanese very much in play. They're all tucking up for their dinner now in Tokyo and Japan, although markets are still open, obviously. So doesn't look like we're going to get up to that high of the day. So some profits might be getting taken on that already as we've moved up. But obviously the US market just getting into full swing. I'll just waking up, I should say. New York, it's what is it, 9 o'clock in New York now, isn't it? So Yeah, that's had a nice run. And sterling, similarly, well, not similarly actually. It's a differential row, isn't it? So dollars, sterling's come back, so you can see the robustness of sterling today. If I just have a quick scan of my weakness and strong, yeah, Kiwi's the strongest of the major currencies today, actually. So I'll be interested to see what that Kiwi position looks like. I would say that because we've got some triggers on Friday night. I'll come to that in a minute as well. So that's another one. Dollar and dollars sort of bounce back. Well, again, less so. You can dollar improved, but again, the 50 has held on that one. So that's looking no, that's hence the stronger Kiwi. And they've got interesting a different break there. Aussie's bounced as well, but it's under its 50 period here on that so short time. So again, guys, as I say, it's really what you're trading. So Brunak, it's really up to you what you trade, but everything's available. If you're new, stick to one or two assets. I don't know what you do. But there's something in your daily life or what you do might be of interest. Are you interested in stocks? Are you interested in forex? Are you interested in gold, oil, that sort of thing? What perks you up? It's always useful to do something or keep to something that you're interested in. Personally, for me, they're just charts. My personal trading system looks at about 50 different assets every day, every night, and trigger or not trigger. And I'd stick them up on the Discord group. And this is what we're going to talk about now, my friends. From last week, this idea that trading, as I say all the time, and to anybody that'll listen or won't listen, trading is very much a mindset, and all of these trades here. I don't know if you can see that now. Yeah, these were the where it's we were. I think it was some of these were. There we go. So this is last week. Well, let's just. So we had a winning trade there. Let me just find it in my notes here. 29.45. Yeah, that was 29.45. That was Wednesday night, wasn't it? Yeah. So Euro Swiss was a loss of 20.4. So it's 20.4. Oh, here it is. It's in. Was that at the end of Wednesday? I think it might have been. Yeah, gold. There we are. On the back of, although we'd had a few. We started off. We had two losers on Monday. We had 1, 2, 3, 4 winners on Tuesday. Ironically, so there we go. That's I'll actually put all this. Well, it's actually here in front of you now. I'm going to say I was going to put it up on here, but it's here to be seen. I don't make this stuff up. I don't have to. So we had 2 losers on Monday. We had 1, 2, 3, 4 winners on Tuesday. So at the end of Tuesday, we were up 123. No, we were up 80 points. We lost 43 on Monday, and we gained 123 on Tuesday, and we were 80 pips, or 80 points to the good on the close of Tuesday. Wednesday is when it all started to fall apart relatively. This is the start of the 9 losing trades, and I'll go through them because particularly the oil positions here, I remember closing them before they got to their stop loss, and what I normally do. These are normal set and forget positions. These ones here, these ones when I say also, these are the ones I look at first thing in the morning, put them on late at night, and look at them first thing in the morning. Say, are they going in the right direction? Have they moved? Have they run out of the energy? So these are like, I check with the 15-minute time frame. So these are normally closed the same day. These, when I say also, as you can see here, so that was put on at 8 o'clock. You can see the time I put it on, and it was out for 53. I don't know if the stop loss. I think it just reversed quite aggressively. So 53 and 8. So yes, there's the first 2 here on. I've written Thursday morning here. So these are the first 2 of the 9 losing trades I had consecutively. So Kiwi, yen, and pound Swiss. Both of those were these ones I'd checked that you know, are they going with me or going against me? They were going against me, so I was out. And we can again, we can go through them. I said I would go through them. I'm happy to do that. So let's just go through them. So let's find the crosses. It was Kiwi yen, wasn't it? Kiwi. It's New Zealand. JPY. We go to the daily. So these were entry here on the 12th, and we were looking to go long, and this is what happened. We were stopped out as it reversed here the following day. So this is our entry here on the 12th. The 13th, we got out before we hit the stop loss. It hit the stop loss, but the following day here on Friday, it actually triggered long again, and it went long at our target level here, and so that one's did reopen on this strategy, but not the one I've put up on the board. So that, you know, it's just following the rules. So it was caught a wee bit too early. The Friday night one is actually currently in the money at the moment using this strategy. So it was Kiwi yen looking to go short. Didn't happen. This is obviously support area now. So this area where our stop loss is now a key support area. This zone here, and it's peaked up. This needs to run through the 50 period if it's going to move any higher, but as you can see, last time it got to the 50, it rejected, so maybe some more profit being taken out on that one up there. Pound Swiss was the other one, and again another one that's reversed on me, if I remember rightly. Pound Swiss, GP Swiss. So 2 losing trades on overnight. That's, you know, okay, that's happened. So again, entry here on the 12th, that day there. We were filled here. Let me zoom it up. So we were filled, that's the 12th, we were filled here, and it reversed, and I closed it out because it wasn't doing anything. We were looking for it to go long during the day. If I zoom this down to the, I'll show you what I do. People are interested. So if we zoom down to 50, I should go down to the hourly chart. It's probably easier. 50 minutes to I actually do it on the hour 50-minute chart. But so there's our entry here on the 12th here, and it had gone against us here as I'd woken up in the morning. So we got out here. The stop loss was down here, but we closed it out here for 8 points. It then reversed, and it was it hasn't got to the target level yet. But see, what, it's just not done anything, has it? Didn't get the stop loss, didn't get to the target because it was an overnight scalping type approach. I was expecting to have a bit of movement. It didn't. It went against me, so we closed out and we were down for 8 pips. So okay, so far so good. That's what happens. This is a bit of a, you know, bit of a biggish loss, but at the same time, same day, later in the afternoon, we'd moved a stop loss. We were moving up. We were locking in gains. We'd got in at 29.17. We'd moved it to 29.25. Everything was looking hunky-dory on gold. So that was, mindset-wise, I knew that was a winner. So it wasn't really bothering me. What happened, though, later on in the day, and gold continued to move up, was that the oil market, similarly, so if we look at the oil trades, so these were different types of trades. Remember these two. So these three were more sort of set and forget type approach. But when I went to check them later on in the day, again, even having done this for years and years and years, I still reacted, and I reacted incorrectly because I sort of panicked. I remember thinking last week about these two positions. One was the fact that I'd taken both of the oil positions. Let's just go back. And so that was doubling the risk, although I'd reduced the lot size. So it wasn't necessarily doubling the risk, but it was more than it would have been if it had only been one trade, but I was exposed to it. So when it goes against you, you get a double hit. When it goes with you, when you get it right, you get a double positive. So it's, again, dealing with that mindset. So if we look at the oil positions, and this is the oil positions, and the ones that sort of that have stuck in my stuck in my psyche. As I say, even now, after all these years, you still think of that because of what happened consequently. Okay, and that's the issue with the geopolitics that's flying around at the moment. So just let's have a look. Let's start with UK oil. So if we look at the what's it like? Oh, I put it on. It's the hourly chart. I want the daily chart. Sorry. So this was my position. So there we are. I mean, see. So again, this was our entry here on the close of business, or roundabout close of business on the 12th. So we got long here. I wasn't looking for very much, but the following day, look at that big move down, huge big down day. It was engulfed by the actual previous day. So what I did, and broke some of my own rules, was looking at it during the day, because it was moving against me quite significantly. So it was 100. We got in here at 71 something. It was 71.04, and I got out. This is another one. Again, I got out 105 or 100. 10 or something to the downside, really at the low, round about the low, just before the low of the day. It then turned around the following day, and then today it's gapped, higher. So if I just left it, which is what I should have done, because it's a set and forget, it's an end of day trade. There's the target, there's the entry. Wasn't looking for very much, was I? Stop loss was quite big, and that was probably the thing that was irking me. Stop loss was a bit too big. The risk reward was a bit too big on that, and that's what happened. So I'd lost 100 and odd points on UK oil, and it did exactly the same thing on US oil. Again, if we just drill this down to the lower time frames, we've got the 4-hour time frame, which I think is how I was looking at it. So this is our entry. I think it was Phil. Can't remember when it was. Phil. Anyway, we actually got paid here. We got paid here. Got an entry here price, and this is the following day. See, this is the 8, that's the 12 o'clock, and that's the 6 o'clock candle. So we've had 4 consecutive down candles, 3 consecutive down candles on the 4-hour time frame. And I think I got out round about here with a 100 odd pip loss, and since then it's turned around and gone and hit target. But that is trading, my friends. But that was the 3rd and 4th consecutive losing trades in a row. That was UK oil. US oil did exactly the same thing. Got the daily time frame again. So again, it's wanted to go long, and it hasn't got to its target. It's a bit more ambitious target, but again, it didn't get to it. It hadn't got to its stop loss, had it? But the following day, I was looking at it too much, even though I'd put it on. And I'm conscious of it. Should have just left it and let the thing breathe, let the thing run. And this is a great example of what we all do. Whether you're trading a 5-minute time frame, a 1-minute time frame, or like me, an end of day time frame or a weekly time frame. The trend is still very much down. It was against the trend, so that was the other thing that was irking against me. We still haven't broke above the 21 exponential moving average here in the oil market, and there's obviously a lot of news floating around. So I knew the risk. I accepted the risk. I reduced my position size because I had 2 exactly same trades on two of the oil trades, but the system had triggered. I trust my system. The system said go long. And obviously, with the UK oil, it would have already hit its initial target. US oil is now in the money if I'd left it from last week. But Thursday's panic, really, which is what happened, and that's what's added to it. So I now have, at this point, 4 losing trades. The other thing that happened on Thursday was the pound yen cross. We just go back to where these open trades. So those 2, 100 odd pips each, or 100 odd points each, getting out before the stop loss. And then pound yen was a long position on the 12th, and that also then got hit as well. So it was like, oh no. So 1, 2, 3, 4, 5, 6 losing positions on Thursday, 387 points. Let me just show you the pound yen move, just to prove what we're talking about. Was entry here on the 12th. something that's on the 13th. It was here to go long, went against us, and again another one that did actually hit. Again, this one hit its stop loss. You can see that. You see the red wick there. If we go down the time frames, you'll see a bit more significantly. So our stop loss was here. On we got in on the end of the 12th, and again, remember this is the 4 hour. So we got in here on the close of business on the 12th, and all day it just went against us. I nearly closed it out before it got to its stop loss, but I'd taken the hit here, and again we got stopped out on that one as well. So that was our let's say 1, 2, 3, 4, 5, our 6th consecutive losing trade. It got worse on Friday as well. And again, another one. Well, I'll say it's turned around and gone to its initial target, but it doesn't matter because that has hit its stop loss just by a few pips. But again, another great example, guys. The stop loss is under the 50 period moving average here on the 4 hour time frames, but it's it only just went under. I had this 190.81 the stop loss, and the low was 190.73. So 8 pips under. And since then it's rallied and moved to its initial target. But again, that's what happens, and it's about accepting that these things happen and not having too much on the table. Now then, this is where the mindset comes in all the time. So this is a good example here. So with my system, I can't show you, but my system, my trading platform over here, it tells me, how much to risk, what sort of lot size you need to risk 1 or 2% on the open position. When I have a lot of positions open, like we had last week there, when we had, I think we had 8, 9 positions open all at once at one point. Again, it automatically reduces that 1 or 2% risk by reducing the lot size. So this, every time I put a stop loss on, whether it's a big one like this or a tight one, it's usually typically less than 2% of the entire portfolio risk on any one particular trade. So if I have 8 or 9 consecutive trades open, I can get quite a big hit if they all go against me, like we had last week. But as we get more positions on, the system adjusts the risk on each and every trade, so it sort of compensates in that way. The beauty of last week, from a psychological point of view, was I knew that although all these, we had these 9 losing trades in a row, the gold trade was going, and I was very much in the money, and the gold trade was going positively. So it all comes out in a wash, guys, and that's what you need to be cognizant of. You need to look at the, where am I at the end of the day? Where am I at the end of the week? What's my yield? What's my profit curve looking like? It's the whole of the trades that you're doing. It's not just 1 or 2 in particular. It's not just these 9 that I've had losing in a row, because on this particular case, the gold trade is more than compensated for that loss. So overall, although technically for the week I actually lost 369.6 points last week as of Friday. If you were following me over the weekend, we had a massive win on XRP, and we got this big win on gold to go as well. So we should have a bumper week this week, but who knows? We'll see. And that's what you need to be aware of. So for we're now 10 weeks into the new year, and I'm still up for the year. That's the most important thing. I was up for February, I was up for January, and that's the whole. So don't drill down, don't get hung up on one particular winning trade or one particular losing trade. It's the whole you need to be, or we need to be, as traders, need to be worrying about. And if you take one thing away from that story of my 9 losing trades, take that one. Again, I hope you've been following us, but the trade we took on Saturday, we put it again, it's up on the It's below this lot here. There we are. That's the gold. Just come, there we go. The gold was so we were at 925, 945 as gold continued to move up. 960. There's that loss on the pound yen. There we are. That's the oil losses. So it was a terrible run. And we had these were losing trades as well. These turned around, but I won't go through them all. But hopefully you get the point. We had a losing run, and then we had this final winning trade from here on the 14th. We got in at 2.3010. Stop loss down here, and I didn't set an upside target. So this was this is our entry position here. These weren't target levels. These are sort of levels I thought we may get to. This was just literally consonant with the flattening of the 50 period moving average here on the 4-hour time frame here on the XRP. There been lots of positive spin and stories. It rallied. It already rallied quite hard before we actually got in on Friday. Was it Friday or Saturday? I can't remember when it was, but here as we moved up. There we are. Here was the story running out. There's the Aussie loss. Kiwi loss. This is from Thursday's trades, these two, but these two have reversed as well. So these are all losing trades on. Hopefully you can see all that. And you can see that that running trade. And this was the we closed half a position around this area we'd already identified on the 4-hour time frame. This area here, 2.4276. So we closed half of the position there. It looked like we were still, steady running away. The moving average nicely aligned. And what happens? We dragged our stop loss up to our entry here. Just so all of this, even if it reverses and takes us out the second 50%, we've still won half the position, and that's exactly what happened in the end. And there we go. That's what happened. We reversed yesterday. Was it yesterday? Yeah, yesterday. I put that up last night. Saturday, Sunday, we came down quite aggressively. It doesn't really matter. We were stopped out, but we still had a good 600 point or whatever it was gain. And again, quite a significant percentage gain. Remember, our stop loss is down here for 1 or 2% on that one. I don't know the exact details, but so there we are. We're in the money on 600 points. Again, the points are, don't read too much into the points because it's percentages. I'll call it 63.3 if you want to keep it sort of round. But XRP was positive. Okay, so. As I say, it's all on here. There's nothing hidden. There's nothing made up. Follow it here on our Discord group. So more end of day positions on Friday, and it was a reversal. Actually, I haven't actually posted Fridays, but it was a reversal. I'm not going to count them because I haven't actually posted them, so I can't say I've done. But Fridays. Positions was quite extensive. There was an Aussie Aussie dollar long position which has just hit its target this morning. It went long, would have gone long if I'd posted it on Friday at 63.23. We've hit 63.33, so it's 30 pips back for the Aussie dollar. So Aussie was long. Pound Swiss, another one, went long on Friday, and that's in the money as well. So this is how it goes. There was also, interestingly, a long position on the Nikkei, and that's also in the money. 37.555. It would have sent. The system has triggered. I haven't put it up on. I didn't share it on the blog here. So the last one was this. XRP. So those three trades from Friday night are all, the Aussie's already hit its first target. The Swiss yen's in the money, and the Nikkei is also in the money. Next one was Kiwi yen, but I think the stop loss is a bit too close. Oh no, that did trigger as well. So Kiwi yen, having been, remember the Kiwi yen, we were short on Thursday. We lost money on that Kiwi yen. Remember we just talked about that. Well, it reversed really aggressively on Friday and it triggered long at 50.75, and it's currently at 51.08 at the moment. Kiwi yen. Next one was sorry, not Kiwi yen, Kiwi Swiss. The next one is Kiwi yen, and again that one's hit its target. Big long candle. Let me show you. I was trying to show you on our charts here as well. Crosses. So sorry, Kiwi. Right. So this was sorry, just got the daily. This was long on Friday. There, having been short here and got stopped out. So that was the long position on Friday, which I didn't post for some reason. I just missed out. I was out Friday night, I'm afraid. Noodles, very nice noodles, South Korean noodles on Friday night. It was, yeah, we had quite a eaty weekend. So yeah, that's already hit target as well, Kiwi yen. So so that series of 9 losing trades we had last week, we've had Friday night, we've had all winning trades so far. So the Aussie dollar has hit its target, pound Swiss is in the money, the Nikkei's in the money, Kiwi Swiss is in the money, and that Kiwi yen is in the money. And finally, it was Kiwi dollar has also just hit target as well from the reversal on last week as well. Remember, we were short this one on Thursday, so it's just where it goes. So that was a short that we got stopped out. We stopped out on. That's went long here on the 14th. There we go. So, but obviously, I did one, and there's the target for me. So it's still in the money, but I haven't put that on Discord, so I'm not going to add. I'm not going to count that on the stuff we put on the Discord group. But certainly, there's a great example of my faith in my system. Having had 9 losing trades in a row, we then get 1, 2, all on a Friday night and money in the bank on the Monday. That's nice, isn't it? But that's you got to take the rough with the smooth, as I said on Saturday when I put it. So 1, 2, 3, 4, 5, 6 trades, all in the money, all making money. We had the XRP trade to it, we had the gold trade to it, so we've had a fantastic start to the week. And gold's still open, but so there'll be more tonight for Monday. There might not be anything tonight, but there we go. And as Katzens wrote here, thank you for a realistic share of the trade. It's not just a good trade. Looking forward to your live stream. I hope you hear, Katzen. So that's really, I talk about mindset for succession trading all the time, and that's, I thought last week it hit the nail right on the head in live time. Here we are. That was my 8th consecutive loser, 9th in a row with the Kiwi going hitting the stop loss, and then we had this winning trade on the XRP. So do follow us here on the Trading Strategies blog. Obviously, all our general chat is up on the general chat post. We'll have a look at that in a minute. Week ahead, quite key Wednesday with the Fed. Tomorrow I'll be live for what we're doing tomorrow. Same sort of time, isn't it? It's CAD CPI tomorrow, isn't it? I think CAD CPI tomorrow. Fed on Wednesday evening. Bank of Japan expect to cut rates overnight on Tuesday, as we said earlier. Obviously, all the oil data, the housing data, the Philly Fed as well later on. So lots going on this week. Obviously, the call between Putin and Trump will be key to sentiment. Bank of England on Thursday, the weekly claims, Philly Fed I say on Thursday, and then we finish the week, as I said earlier, with retail sales out of Canada. So, guys, if you're not a member of the gang here at theproptrade.com, do come and join us. You've got to follow the rules, stick to the rules, and you can make some real money from these simulated accounts, my friends. Obviously, those 9 losing trades, we'd have to really tie down our losses if we're not going to sort of we hit the rules. But You know, if you put a I've got a special code here, SC25 gets you a 25% discount on what I view as very, very competitively priced, especially for what you get from the proptrade.com. Very, very nicely priced challenges anyway. But the beauty, and again, another thing about having those 9 losing trades in a row, having 12 trades open at once or whatever it was last week. That's why you need that's why the bigger accounts, the $50,000, $100,000 accounts, gives you the ability to use the leverage and the margin to take those positions. So as I say, our most popular is the 25,000, and that's a really good size. 25,000, 50,000 if you're trading with Forex is a nice account. $175 to give you the ability to trade with a $25,000 account. You take 25% off that, and it's around about less than $150, I think, isn't it? Did the maths right? Yeah. So SC25 will get you that 25% discount on those challenges, and follow the rules. Keep these losses in mind. I came very close to a drawdown on my account last week with those losses, but it's more than compensated, knowing it was more than compensated for by the winning trades. So there we go. Not a lot of data for the rest of the day to come. So enjoy the rest of your Monday, and as ever, may the pips be with you. If there's no more questions, my friends, Runak, I hope I've answered your question. I hope that made sense. Say trade with something that makes sense for you. I'll leave you with the gold market. Have we reversed to my 88? No, 988 was still bid on that one. My stop loss still sits there at 29.78, and we're still up for the day. Although we're sort of coming back down. And finally, what did that? Is the euro reversed or not? Euro. Remember, we were on the 5-minute, weren't we? Indeed. Came into this level and we've turned around. There we are. So that was our nice move down into that level we were talking about, the low of the day, that 188 zone, and now it's turned around back to where we were ahead of the day, as you might expect. But that's the issue with trading these short-term time frames. You can't get committed, you can't get too attached to one position as we move down. But it hit its target, didn't it? And yen, so that turned around as well. No, actually yen's dipped a wee bit, but it's still bid to the upside. So again, another one that's not got to the 149 level. There we are. I was saying that was that level. We might have already hit it. Looked like we had come back down, but yeah, mate, that's looking a bit more positive. Dollar coming back against the yen. Okay, my friends, take care. See you tomorrow, and I'm off for some lunch. Have a great Monday. All the best. See you. Bye bye.